Good morning, everyone, and good afternoon or good evening from anywhere else that you guys are joining. As she said, my name is Prince Rajbhandari, and I'm gonna speak a little bit about insurance and its AI's application in insurance, and maybe a little bit about or touch on a little bit about the ethical considerations behind the use of AI. But before I do that, I did wanted to thank NAAMII for this opportunity, and especially Bises. Many of you may not be aware, Bises and I were classmates back when we were in St. Xavier's College in Maitigar, and he's one of the smartest people I know. And it seems like just from looking at what he has been able to achieve alongside his co-founders and all the team members with NAMI, furthering the foundation of analytics, AI. It is very commendable, and I feel like we need all to be grateful for the community that he has built, that you all are part of. A little bit about me, my background is more on actuarial science. I'm an actuary by training. I'm not an AI expert. I'm not a machine learning expert. So, hopefully you guys don't have any difficult, technical questions around that for me. I think those are better served for some of the other experts that have been along the panel in some of the previous discussions. But regardless, I think I do have a great passion for insurance, and I wanted to share some of those insights with you today. A quick disclaimer here, the presentation is mostly for the educational purpose. So the agenda is simple. I'm going to, give you guys a quick overview of insurance, how AI is being used within the insurance space, and then the ethical considerations surrounding it. Just before I start, I wanted to baseline all of your knowledge on insurance. So how many of you are familiar with the concept of insurance, or you have purchased any type of insurance before? Type 1 in the chat box if you are familiar or have purchased any type of insurance before. I just saw one, so maybe not a whole lot of you. That does give me some level of baseline on how to approach this. If nothing else after this presentation, I want you to take away that there is an exciting AI adapted insurance world ahead. And just when Bhaktapur was talking about this, that sort of made a good connection. AI being used within finance and insurance industry is right now on the forefront of it, and there is various use cases surrounding it. So, before I delve into AI's use in insurance, I wanted to give you guys a quick preview of what insurance is in itself. Insurance enables risk transfer and risk sharing capabilities, as well as the loss prevention steps. And those are vital things for well-functioning economy. If you think about, let's say, a tea farmer in Elam that wants to expand their business, but are worried about, climate change risk. There is an insurance product that might be able to help mitigate some of those risks for him or her. Think about Elon Musk. He is trying to make humans a spacefaring, a human as a multiplanetary species, developing rockets. In order for him to take those risks, underneath those processes, there are insurance mechanisms in place for those types of risks. So in order to manage those risks, whether it is for individuals, if you think about it as a life insurance or retirement or auto insurance or health insurance, or for in the commercial sector, the insurance for commercial businesses like a fire and D&O insurance, or natural disaster and climate change. There are multiple aspects of insurance products and processes that are in play to help enable risk sharing, risk transfer capabilities. Think about earthquake that happened in 2015. If Nepal had a robust, Nepal is a fairly, from a development standpoint of where insurance is, it's fairly sort of at the primitive stage. If Nepal had an insurance mechanism in place, there might have been better building codes, to help sustain some of those impact from earthquakes. And even after the earthquake, the financial ramification of it might have been lower if there had been a little bit more prevalent use of insurance product lines within the industry. So insurance in itself is not bad. I know there is a lot of negative stigma surrounding insurance. Insurance in itself is not a bad play. As I mentioned, from a small farmers to all, everything outside of even Earth, there are insurance mechanisms in play. It's just, it's just how you use it, how it's distributed, those kind of things come into play when we are thinking about insurance. Moving on, and the reason why I feel like it's a right time, at least for you guys, to think through the global risk landscape, is that it is evolving very quickly. Some of the risks are quantifiable, some are more difficult to insure and may not be as quantifiable. If you look at the previous sort of in the past, the risks were more siloed. You might have economic risk, you might have environmental or geopolitical risk, societal risk, technological risk, and there might be few areas where these things sort of interject, right? But now everything is interdependent and it's transferring the risk landscape tremendously. You might want to get into the global risk report from World Economic Forum to get a little bit more understanding of how these all interdependencies are in play. And the nature of risk itself is changing. I'm not going to speak a lot about the property, mortality, morbidity, or health risk, but as I mentioned before, insurance is not just about, after the fact. It's not just about financial loss mitigation after something happens. If there is a robust insurance mechanism is in place, it also helps in risk mitigation and avoidance in certain ways. In more developed insurance market, in order to run the business, you have to have the insurance first. And in order to have the insurance, you need to have certain control factors set up for those businesses. That helps mitigate risks, that help mitigates losses. You can't have a business without the fire hazard safety system. And you can't have that, you can't have insurance, if you don't have those things. And those are, some of the ways how insurance is, underneath playing all of those, all of those sort of a risk mitigation and risk avoidance play. There was a McKinsey report earlier this year around how the future, AI is shaping the future of insurance and how there are, 4 specific trends, particularly related with AI. One, the explosion of data through connected devices. You might have been, thinking about, from fitness trackers to smart assistants to, smart appliances. It is estimated that maybe 1 trillion connected devices will be there in the world by 2025. And that provides an ability for insurance company, let's say as an example, to know their customer a little bit more in depth. That might be able to provide them a personalized pricing of the risk that they might be taking on, or more real-time service delivery. There is an increased prevalence of physical robotics now. Think about the area, autonomous drones that are being used in even in farming situations. There are autonomous farming vehicles. Buildings, 3D buildings are coming into play as well, 3D printed buildings. How does that impact the commercial insurance space? It is really fascinating, all of those aspects of robotics and autonomous driving that is coming into play. Open source and data ecosystems. There is now a tremendous systems and ability for the data to talk to each other across industries, and obviously within the regulatory and cybersecurity framework. But that's something, again, is driving the insurance forward as well, and more from a perspective of how AI is impacting that. Advances in cognitive technologies. Bhaktapur was talking about NLP, neural networks. These are primarily used for processing visual or audio or unstructured data processes. But these can be used as a real-time service provider. One sort of the example that I can think about is, let's say you have an auto insurance and you're going from point A to point B. Usually, you take the safest, least, shortest distance for your driving behavior. But say you want to look into a scenic outlook in one occasion and took a little bit of a riskier sort of a drive. In a real time, if that's what you are doing as a risk-taking activity, in a real time, there is an ability to increase and change your premiums because of your risk-taking behavior that changed. And the AI and cognitive technologies can help propagate that. And AI in insurance news. The reason I have this slide here is because, as you saw in Bhaktapur's slide, there is a lot of brain power that is being invested, a lot of funding and investment that is being invested within the AI industry, within the insurance industry, particularly for AI. And I feel like it's the right time for you guys to at least look into that and see if any of those areas might motivate you to be in. So how does AI impacts various insurance value chain verticals? There are, if you dissect down insurance value chain verticals, I feel like there are 4 primary functions, so to speak. You have marketing and distribution. This is where the NLPs might be able to help out, the chatbots, how to acquire customers, how to develop marketing strategies, right? Underwriting and pricing, that's where my interest has been, and that's where I think there is a tremendous opportunity ahead as well, is to understand the risk classification, how to price the insurance product, how to price the risk that the insurance product is trying to cover. Policy administration and maintenance is, once you buy a policy, insurance company needs to maintain it. Some of the policy might be there for 2 days, 2 weeks. Some of them might be there for years and years. How do you manage the data points surrounding that? And there is an AI abilities or AI sort of a infrastructure that are in place to help develop those value chain verticals as well. Claims management. Think about once there is a loss event, how is claims sort of managed? How the claims are verified? How frauds are detected? AI is able to help out on many of those fronts, and we can talk a little bit about some of those examples as we go ahead here. So as I was talking about the underwriting and pricing, the insurance math in the simplest term And I wanted to throw in some math here because as I was looking into some of your prior presentations, seems like there was a very heavy maths involved. So why not, right? But the math here is pure, very simple in the in the fundamental sense. Insurance risk premium is the probability of risk as times the severity of risk. Let's say in life insurance space, the probability of risk is the probability of dying for the individual, and the severity of risk is, if you die, what is the coverage amount that you are going to need, or what is the coverage amount that the insurance company needs to pay out, right? And there are machine learning sort of capabilities that are diving into the details of trying to get more accurate, predictions surrounding these things, and that's where some of the application comes into play. As I said, my experience has been mostly on life and retirement insurance space. I did spend some time on the property and casualty, but majority of time has been on life insurance. So, here are some examples that might work into play within the life insurance. But but I'm not trying to discount the tremendous amount of application that has been ongoing on the property and casualty insurance space or health insurance space as well. One of the things is around accelerating the underwriting processes. You guys might not be as much familiar with life insurance space, but in order to get life insurance, a customer needs to go through tons and tons of questions around their income, around their health. They might need to provide blood tests. They might need to provide urine tests. They might have to provide the physician's statement. It's a long process. It sometimes takes weeks or even months to get approved for life insurance. AI can help accelerate those kind of underwriting process. Pricing more accurately, how to predict mortality or morbidity risk events, those can be also be helped through AI. Here is some examples. So on the underwriting, typically insurance company, and by the way, insurance company knows a whole lot about you sometimes. You might not think that they don't have as much data, but they do collect a whole lot of information from you when you're applying for insurance, like your insurance history, your driving record, your prescription record, your credit history, any other public records that might be available. And then, as I mentioned before, medical lab results, blood and urine or other types of fluid tests. Attending physician's statement, your income and financial info as well. Those are more of a traditional data points that the insurance company collects to underwrite the process. Nowadays, with fitness trackers, they might be able to bring in activity levels, lifestyle and social sort of a data points as well, or other electronic health records. So there is a tremendous amount of opportunity around how you use those data points to build the predictive models so that a particular individual or a group of individuals can be assigned a certain risk class. You guys might have seen how some of the unstructured text can be what you call it, can be utilized to sort of provide a more contextual understanding. As I mentioned, insurance company collects tons and tons of data around, let's say, the attending physician statements. In order to process that individually by underwriters, it takes a whole lot of time. Can that be can AI be integrated to understand these unstructured text within APS and provide a specific outcome? Certainly, and a lot of insurance companies are doing that. predictive analytics to simplify the evidence requirement. As I mentioned, there is a whole lot of evidence requirements, whether you're buying life insurance or other business insurance, or in some instances auto insurance as well. There might be a way to maybe not even not even sort of minimize the evidences that might be needed to submit those insurance processes. So that's something that a lot of insurance companies are looking into as well. Mortality impact, as I was saying, in order to price the mortality, there might be a whole lot of variables that the insurance companies is looking into. Some of those variables may not be as much valuable. Can that be eliminated? Can be based on certain predictions? Can even some of the fluid tests be eliminated? There is a whole lot of technology that are being used to make the process more efficient. Detection of a smoker or non-smoker class by voice. I was working in one of the in one of my previous company. One startup reached out to us and said that they can identify the risk class of an individual through selfie. You can look it up. The Lapitus Solutions is able to use various face recognition analytics to underwrite a policy. They might be able to detect smoker or non-smoker based on your selfie alone. And we are going to, I might be able to touch a little bit on the ethical considerations surrounding that. But those kind of technology are in play even now. I mentioned fitness tracker. In the past, age, gender, drug use, BMI used to be a key variable of importance. Now, with the prevalence of fitness tracker, steps per day has been more significant as well. So there is that sort of data points that is able to predict the mortality risk of an individual. Tesla insurance, you guys might have heard about Tesla as an automotive company, but they have their own insurance product as well. And they are using a real-time driving behavior. In the past, it used to be, as I said, age, gender, other traditional variables that auto insurance companies would look into. Tesla is trying to, completely change the game and look into a different aspect of driving behavior to sort of come up with the premium that is needed for those insurance. Here's a quick slide view of InsurTech startups. And the reason I have it here again is to sort of showcase the importance of what you guys are doing right now. As machine learning scientists, as AI engineers, there is tremendous opportunity, not just in more developed insurance market, but even in Nepal, to provide your expertise in some of those insurance verticals that I talked about. And I think it's a right time for you guys to think about or look into those things. Now, getting into some of the ethical considerations of AI within insurance space. There's always two sides of every coin, right? The invention of ship was also the invention of shipwreck. So we need to look into the other side of the AI as well, like mostly from the ethical standpoint. And why it is important is because it's not just a compliance or rules. Henry Kissinger once equipped, the stakes are so low, in terms of by that what it means is that there's no external factor obligating you to do things. As a from an ethical standpoint, when you're building your model, it has to come from within you. right? The difference between ethics and compliance is you are doing what is right, something you choose to consider when taking action, as opposed to compliance is you're trying to follow the law, something that government or other legal entity requires you to do. You know, in many instances, there might not even be any laws, and you have to think through what is the ramification of the model you are building. And that's where ethical standards come into play. And why is it important, particularly for insurance space, the AI ethics? And the fundamental concept behind that is the social context. You know, if you're using AI to, do something around the autonomous underground drilling machines, or let's say, there is an AI model that you are building for a space shuttle that is, researching further outer of the space, the ethical conundrum might not be as important. But when you're dealing with people, when you're dealing things in the social context, and insurance clients are that social context, the ethical consideration is important. So, this is just a basic definition here, but, the reason applied ethics is important is it is the direction of your moral compass, how you treat people who you don't know, or how you conduct yourself when no one is watching, right? And a moral decisions takes into consideration whether an act is right or wrong. Legal decision takes into consideration whether act is legal or illegal. But one thing that is important, ethical decisions involve choosing between two or more right as well as legal option. So for insurance, what are obvious ethical issues? You want to build your model, but you need to be cognizant of the fact that there should not be any discrimination. There are some protected status like races, disability that you need to think through whether or not your model is raising any ethical questions. Privacy is another thing. Bias, right? Your assumptions, data, code, algorithm, all have certain biases in it, and you have to think through on how that affects the overall sort of a result of the model. And there are not so obvious issues. One of that is people building models are not sophisticated enough in domain expertise. This is something that I sort of, realized or, gone through firsthand. In one of my previous company, a Fortune 50 company, an executive decided to expand AI team. He wanted to bring AI within the insurance. So much so that he hired maybe 150 or more AI engineers from prestigious schools and universities. These are PhDs from, all parts of US mostly. But, over time, and within 2 or 3 years time, that team needed to be disbanded and maybe, decreased a little bit because even though they were experts in their fields of AI and machine learning, they lacked some of the domain expertise around insurance. And insurance does not operate in vacuum. There are socioeconomic constraints, there are regulatory constraints, there are internal legacy constraints within insurance companies that needs to be thought through when you are building these models out. So, that's a one, not so obvious issues that I wanted to highlight. Understand the limits of your model and what it can tell you. One of the question that was asked, I think, in the previous comment was, how to remove some of those biases. It's not easy. It's not an easy question to answer. You have to reflect diversity of thought, background, and experience, because there are ingrained biases within each of us that, will be reflected in each of our models. And, and then there's this quote, but the data sometimes is shit, right? It sort of you interpret those type of data how you want to interpret sometimes, and you have to be careful on that as well. Different companies that are collecting points what the societal accept, what more all of those based on if you might be able to use that to see that you're a drug or that does talk about age, gender, use reduce as an institution not based on based on everybody.
Yeah, so the video is all right, but the audio it seems to be a glitch in the audio probably. Are you able to
Even
hear?
now,
It's good. It's good now actually. Shall we try again? Try it. Yeah, we can hear you fine right now. It's a little bit inaudible.
are you able to hear me now, Mahesh? Is it better?
Uh, yeah, probably we can give it a go once again. If
How about now?
yeah, yeah, good.
Okay. So I don't know where you guys missed my presentation. Has it been bad throughout? Mahesh, has it been bad throughout, or shall I continue where I'm
Yeah,
at?
no, it was actually pretty fine till it was only the last slide that got a bit weird.
Oh, okay. Yeah, no, I'm done here actually. This is the only point that I wanted to make was,
Okay.
when we're talking about personalized pricing, there might be inherent, biases in your model that might not, it might not be intended, but, it might be an unintended consequence of indirect biases that is coming into play. So, that's a wrap of my presentation. Again, thanks for this opportunity. I have my email here and LinkedIn information if you want to, reach out to me. I will stay here for a couple of minutes for any questions, and also be available in the Discord chat box if you have any comments or questions. Any questions?
Do we have any question from the hall? Maybe we can have time for at least a few questions. Yeah. Or maybe type it in the chat. That's also okay.
Insurance is not an exciting topic, I know, but you guys need to think about it as you go about it. I think it does touches up a lot of different industries, whether it's genetics or bioinformatics, or as I said, airline industry, healthcare industry. It's one of the very few industry in the world that is making an impact in multiple other industries. And growing up, even my friends, a lot of my friends and colleagues, they have not been as much involved in the insurance space. But I feel like it's something that everyone, or at least some of you, might be interested to delve into.
Wait, I think we have a question from Sandarbha. Please go ahead.
Yeah, so my question is, uh, I think classification by definition is biased. Like even when you're saying a cat is not a dog, I mean, there might be someone in this world who'd say it's a bias. So can you really have, especially in insurance, where like you're basically categorizing people into risk buckets, like you're meant to have bias. So like, does that limit the use of AI in insurance, or do you think there's like a delicate point in between where you can use AI in categorizing people into risk buckets while also being like ethically sound?
Well, not every biases are bad, right? If you look at the history of insurance, it used to be that, there were different pricing for blacks versus whites, or, women versus men. It has evolved, the racial distinction is no longer there, but there are still some of the gender differences on mortality rates that is being used. It's not necessarily biased distinction. It's more so that's inherently the mortality risk for male versus female is different, right? So this is why I feel like there should be a balance of, one, regulatory oversight. The insurance industry is one of the heavily regulated industries. So regulatory oversight will come into play. You have to bring in the domain experts from different fields, different backgrounds to understand those viewpoints as well. So you can't eliminate, I feel like, every biases. There might be some level of biases that might be acceptable from a legal standpoint, as well as from a ethical standpoint, and you just need to figure out what those are. Very good question, though. Any other questions? All right.
Do we have any more questions? Maybe.
Oh.
Yep. Looks like.
So the question is, is there any like external agency or any kind of organization that kind of looks at the different kinds of the startups using NLP and penalize them, for being more biased? Like, some kind of body from the government, especially in the US.
The way you have to think about this is, look at it this way. Insurance companies in itself are very heavily regulated. There are certain things they can or cannot do from legal standpoint. In US, each of the state has insurance commissioners that reviews insurance pricing and other insurance regulations. In Nepal, you have Bima Samiti that does that, right? But in terms of the startups, what happens is when startups, let's say, approaches the insurance companies to use their services, inherently insurance company in itself is taking into that consideration. So if a startup, as I said, Lapidus in my example, is coming to an insurance company and touting that their facial recognition software is very good in determining the smoker or non-smoker habit of an individual, it's up to insurance companies to understand and see how much of it is ethical in terms of its practice, and if there is a certain regulatory restrictions for they might have to reach out to the regulatory body to get the approval for the use of that service. So yes, there are regulations in place, there are controlling body in place. It depends on situation, it depends on the services that are provided. It's the startups themselves may not have any limitations or restrictions. But the insurance company, in order to operate within the society, they have to get the license from the regulatory body, and there might be some restrictions coming into play as a control mechanism there.
So in your experience, like at the end of the day, all the insurance companies are profit making. The organization. So how much? So would they? So like at the current state, are they? Are they trying to be more ethical, or they're just overlooking? How biased they are to generate more profit. So what do you think?
Well, every business is a profit-making entity, not just insurance company. Insurance company is there to manage risk. It is not there to. Not there to price things unethically. Even if and that's why I mentioned there is a bad stigma of insurance companies. And particularly where there is a very lapsed regulatory framework, or where there is a decreased amount of customer education, it can be seen as insurance companies trying to make profit by conducting unethical behaviors. I don't think in the vast majority of case. These AIs are being used mostly from a perspective of looking into just for profit making. It is being used to be more precise in prediction power of as if on within the life insurance space, the mortality risk, or within auto insurance, the accident risk, or those kind of things. But it's not necessarily that the pure reason for use of AI is profitability. Obviously, if you are pricing extremely high, then the risk underlying it based on the AI, eventually the competition and capital market will drive down that behavior, right? So let's say one insurance company has a very good advantage in terms of how they calculate their risk for a particular person dying, because they have built this, a very sophisticated mortality risk prediction model. Eventually, that kind of prediction power can be, can be copied by other insurance companies, or the competitive aspect of the business will force it to go down in all cases. One insurance company may or may not be profitable a long time, just because they have certain AI enabled model in that can predict those kind of risks. So it's you have to look at it in the context of broader competitive dynamics of the economy as a whole as well. I hope that answers the question.
Any other questions? Last call. I think we're good in the hall. Any questions on chat?
Not yet.
Perfect. In that case, let's give a huge thanks to Mr. Rajbhandari. I hope this was informative to everybody. And there's his email and LinkedIn, though we can barely see it. And
I will share the slides so that everybody has that. But thank you everyone for the opportunity here. And again, thanks NAAMII, BCS, and all the organizing team committee members.
let's give him a round of applause.
Thanks.